All right, so we had another very interesting week in the markets. The big news, the Fed cutting interest rates 50 basis points. First things first, if you get value out of this video, please like and subscribe. Getting right into it, the Fed cut 50 basis points. And the market had kind of an interesting reaction. Initially, it sold off. Next day, up nicely. Last on Friday, kind of treaded sideways a little bit. The S&P did break to a new all-time high on Thursday. Actually, a nice new all-time high. It definitely broke out nice, but then it did sell off a little bit after that. But we still closed the week just above 5,700 on the S&P. So all-time high. And getting right into the first point I wanted to bring up here from Jim Bianco. So he releases a couple interesting things here. Interesting comment about the SOM rule. It is a perfect track record in not just predicting recession, but saying we are already in a recession by an average of 3 months. And again, that's going back to, the 1950s, I think it is here? Yeah, 1950. But also, we also have another perfect indicator that we are not in a recession, being the S&P hitting a new all-time high. How many months has the S&P made a new all-time high in a recession? Since 1945, 0. So this is why I've been saying that it's very hard to tell what is going to happen going forward. It's always very hard to tell what's going forward, but right now I think we're very interesting because we have several very powerful indicators that point towards recession. We also have several very important indicators that point towards, no, we're not in a recession. In fact, we're in a bull market. So I don't know what's going to happen. My prediction is I still lean towards bull market. And the reason for that is that credit spreads are still okay. The S&P is still breaking out. Unemployment's still not crazy bad. Inflation, at least as of right now, is under control. That's questionable about whether it'll stay that way, but at least as of right now, it is under control. So that is my prediction. And we still have, we have had, going into the week, we had 100 basis points of cuts that were priced in by the market. And I think the Fed did the right thing. Again, I think that the market should determine these things, but I think that the Fed did the right thing by cutting 50, because if the market's pricing in 100 points by the end of the year, it makes sense to do 50 right off the bat, given there's only 3 more meetings. Now there's only 2 more meetings. So that makes sense. So I don't think they necessarily got it wrong. They've gotten a lot of things wrong in the past, but I don't think they necessarily got this wrong. So I like that. The big question, like I mentioned, is what happens going forward. I think we're gonna chop sideways. But if I had to pick up or down by the end of the year, I would probably bet up, because I think that there's more indicators that point towards that. But one thing to keep in mind is that if the economy does weaken, things could go down really quickly. I think it's going to be hard for things to go up really quickly, but I think we could go down 5-10% in a month. But could we go up 10% in a month? I think that's kind of hard to believe. So that's just what I think of this news, and I think people need to be very vigilant. And the big question is, as always, what do I do? The market's at an all-time high. Does that mean that I sell and wait for a correction? In my opinion, no, because your investing philosophy, it shouldn't change whether we're at a 52-week high or a 52-week low. Nothing should change. The only thing that you should be doing is looking for value. You should be always looking for value. Now, there's going to be less value when the market's at an all-time high compared to like a 52-week low. That's true, but just because it's at a high does not mean you should sell and sit in cash. And just because it's a low doesn't mean you should just be blindly buying, because a market that's at a low can always go lower, and a market that's at a high, chances it's going to go higher. It's not a matter of if, it's a matter of when. So that's my little question on that, is always look for value. Even though we're at an all-time high, there is still value in the markets in certain areas. Bitcoin had a very nice week. It's up to about 85, 86 Canadian. We started the week at about 78, 79, so up about 7, 8%, whatever that would be. And this is from Bitcoin Magazine. Addresses with a balance of at least 0.1 Bitcoin is nearing a new all-time high, basically within striking distance of that. And this is from, I think this is from pre-rate cut, so I'm guessing that amount went up, if anything. So Bitcoin, again, it's treaded sideways for, we're going on, 4 months, pushing 5 months maybe even at this point. I'm not sure off the top of my head. But whenever it comes to investing, short-term price fluctuations, and again, 3-4 months, that is short-term in the whole scheme of things. So stop pretending like this is some long-term trend here for a lot of people out there that think that. Those kind of trends should not play into your philosophy. That is irrelevant. What has happened over the last 6 months to a year? We've had ETFs. We've had not only ETFs in the States, but ETFs in many other areas. We have now rate cuts. We have an easing cycle. So, in my opinion, everything that's happened over the last 6 months to a year is bullish. Like, there is nothing that is not bullish. So I'm as bullish as I've ever been. If you didn't know the price, then would you be as bullish as you've ever been? Yeah. If you're one of the anti-Bitcoin people, well, yeah, of course, nothing's going to change your mind. But if you're actually neutral to honest on this stuff, I don't see why you wouldn't be bullish, right? So that's an important thing to bring up here. And short-term price movements are irrelevant. All you need to look at is what is going on in the whole scheme of things. In the whole scheme of things, we have mass, we don't have mass, but we have more and more adoption as the days go on. The whales are buying. The average person is still net buyers. So why would you be bearish? There's really no reason to be bearish, in my opinion. Obviously, we could get some deep recession that could be a temporary blip on the radar, but at the end of the day, it's still most likely going to be a temporary thing. So, getting into the markets from this past week, S&P was up about 1.3% roughly, I think. Let's check the SPY here. Yeah, actually, it was a little over 1% on the SPY. If we look at the NASDAQ, I believe the NASDAQ was maybe a tiny bit more. Yeah, the NASDAQ was up about 2% actually. If we look at mid-caps, had a good week, I know. Yeah, mid-caps are up about 1.5%. So mid-caps outperforming the S&P, and I'm pretty sure off the top of my head that small caps did better than both the S&P and the mid-caps. Yeah, they're up about 2.4% roughly. So like I've mentioned time and time again, that I think that small caps and mid caps probably will outperform. Now again, another important thing to point out here is the Mag 7 ETF did outperform, I think, all of these things over the past week. But you also have to keep in mind that 1 week doesn't necessarily prove a trend. Yeah, it was up almost 4% on the week. But I think that I still think that the place to be is your small caps and your mid caps. Not that the large caps aren't going to continue to do good. Not that the Mag 7 can't keep doing good. But the Mag 7 can only do so good. The NASDAQ can only do so good. Like, eventually there's going to be diminishing returns there. So that's why I'm focusing more on the small caps and the mid caps going forward. One other thing here to bring up, marked portfolio, pretty much the same thing going forward. EQB, I think, has become the largest, or the second. No, MSCI is still the largest, but EQB is above $100 a share. I've been talking about them forever. They are one of my favorite stocks. They continue to be one of my favorite stocks. Alimentation Couche-Tard has not done so well lately, but they're cyclical. I still think they're going to be okay. They're not necessarily one of my top Canadian plays. I think that EQB probably is right up there. Probably are the number one, to be honest. I don't think I made any other buys this past week. One other important thing that I forgot to mention here, this past Friday was options expiry. So again, that typically will determine a trend in the markets. And considering we closed up, I think that near term, I still lean bullish, which is why, like I mentioned, I lean bullish near term, because options expiry will help sway markets. Another important thing here, Louis Vuitton is basically at a 52-week high. That's one I think I picked up another 100 shares. I'm up to 200 shares here on Louis Vuitton. I might even buy more, to be honest. They're getting pretty appealing. That's one that I think that, again, when you have a little tougher times, they're going to get hit pretty hard, but typically the tough times are a temporary thing. The only other thing that I would mention here is I've started to run a covered call strategy on BITO and RSP. I have 1,000 shares of BITO and 100 shares of RSP, because this is my long-term play in the personal portfolio, is to run a covered call strategy in an attempt to yield more returns and more premium, to basically a way to increase the returns on your investment. Now, I've only been doing this for a couple of weeks now, so I don't have enough data to go into more detail. But give it 3 or 4 months, I will make I will make a dedicated video probably every few months, maybe on a quarterly basis, just going over that, because I want to get a good set on just how good a returns can you expect by running your own covered call strategy. And I'm going to kind of play around with strike prices and whatnot there, because that's always the big question when it comes to a covered call strategy, is that how far out of the money do you sell your calls? That's the big debate. Obviously, the debate for closer to in the money is you'll get more premium. The problem with that is that the likelihood of those calls going into the money is higher, and then obviously vice versa for being more out of the money, in that you'll get less premium, but you'll be less likely to have those shares be ending up in the money. So I'm trying to stay a ways out just to be a little bit safer. But the last week we did have a big run up over the last couple of weeks in the S&P and in Bitcoin. So both of them I did have to buy back my first time selling. So that definitely set me back a little bit. But over the long run, it's still going to help. The question is how much, and the question is how far out do you sell. So that's my other big update here. I have sold off a lot of. I'm getting very low on my SPHY and USHY shares. Those are my corporate bond shares that I bought. I bought a lot of those. I think I had over 5,000 shares of each at one point. I'm down to 1,300 SPHY and 800 USHY. I'll probably get those down to about 10 to 20,000 per. So I'll probably still sell off about another 30 to 40% of those. And that's something that I'll sell off as yields come up. The last thing I'll bring up here is something I brought up before again as well, but I think needs to be repeated, is that a lot of people are saying, oh, now's the time to get into real estate, that rates are going down. And that's not the best way to think about it, because the rate cuts have been priced into the markets. So again, and you've seen that the REITs, basically all of them have rallied, some of them quite significantly. So don't think that you can buy some of these rate sensitive stocks and sectors and think you're going to get these great returns. Now, to be fair, if we get a more dovish than expected Fed, yes, that will work, but there's no guarantee that will happen. So that's the last thing I wanted to bring up there, is that a lot of people are making that mistake, I think. And again, the time to buy REITs was like 2, 3, 4, 5, 6 months ago. And the time to get into the bond rally, same thing. So it's not to say that we could easily get a more dovish Fed, which would make that trade look good, but there's no guarantee of that. So just keep that in mind. So anyway, like I mentioned at the start of the video, if you get value, please like, comment, subscribe, all that good stuff, and stay tuned for more.